nice to chat to you again, and welcome to everyone to our October newsletter. This has been one very interesting year, and as you can see, here we are sitting in our offices for the first time in a long time, but socially distanced, and of course without, when we're without masks. Lockdown had such a hectic impact on everybody personally, and it's so interesting to hear our stories from our clients and how they coped in these times and in very difficult times. But of course, lockdown didn't only have an impact on us personally, but also on markets. So during September, we've seen a little bit of a correction on the American markets, what they call a healthy correction. And what is your thoughts on that, and how will it impact other markets?
Yes, Yolande, welcome. I think one has to realize that we have had the lockdown. We've had the economic numbers from a GDP point of view coming out. South Africa was down 16%. Forget about the 51%. That assumed that lockdown will continue at its worst for the whole 3-month period. So this quarter we'll see a nice healthy correction as well, coming up, jumping up, a kind of a V. But the question is, if you look at the drop and the recovery, the question is, we're only now starting to see what the real economic impact is. So one has to assume that markets, specifically in the US was driven by 5 technology stocks, the big tech names. And one needs to be careful, a lot of those companies have outrun their valuation. So therefore it is not strange or a surprise that you are going to see volatility. Remember, we're now in the beginning of trying to figure out what the real growth is going to be the last half of this year and going into next year. So I expect this volatility, this uncertainty to carry on for a while, and I think investors needs to be careful that the medical element of the lockdown we've seen, and we've been following that on all media, all news. The economic impact is going to take longer to see what it really is. Companies, individuals' balance sheets is in a worse condition than it was 6 months ago. Consumer spending will be in a worse position, and that's going to take time to work through the system. So I'm not concerned with corrections in America. I think that will happen. I think we're going to be volatile, and there's other elements. There's the election, which we can touch on later, which creates uncertainty. So in this case, uncertainty equals volatility, and we're going to have to expect it. That goes as well for South Africa, for the rand, for sentiment. We're going to have to live with this volatility and this uncertainty at least for the next 6 to 12 months, until we have a clearer indication as to what's going to happen in the underlying economy. But having said that, this is an uncertain environment, difficult to predict, difficult to make decisions. Firstly, let's just from our wealth point of view, our view on the rand phasing in, and then also on underlying in the markets and phasing in. Where are we?
So Theo, we still think that 17 rand to the dollar is a good place to take your rands over, and then also 20.50 to the pound if you want to go to pounds. What we've seen with this volatility of the rand is that people very often miss their level where they want to take their money offshore. So what we do recommend is that you fix your rate with your bank or with your currency exchanged company, and that you make sure that there's someone else that looks after these rates from minute to minute, from time to time, so that you don't have to sit there watching this all the time. It's happened that on a day for 2 hours the rand is strong, and then it goes right back to a weak level. And the other thing that we've seen is that the SARS clearances takes a little bit longer. They're asking for a little bit more information, and the one thing that holds up, most auditors knows this, so they will have their ducks in a row, so to call, but the one thing is that they want to see that the funds are available to take offshore.
In an account?
In an account. But it doesn't have to be a bank account, it can be a money market, or a unit trust statement would also be acceptable. So that's all good. Then of course, so at these levels we say take all the money that you have available and that you want to take it over. But then once it's offshore, we think that markets are still a little bit on the high side. That we phase in over 12-month periods if it's a higher amount. If it's a smaller amount, we'll go to 6 months. On the local market, and I'll ask you about the levels there, but we think that it's cheaper and that we can shorten the phasing period there. So there, for smaller amounts, we say 3 months, and then for larger amounts, we go to 6 months. So just on that level then, what do you think about the local market?
Look, I think there's pockets in the local market. If you look at the banks, extremely cheap. It is the cheapest it's been in decades. So, and part of the reason is there's a few factors in it. First of all, banks have made provisions for massive bad debts. The question is, did they provide enough? Was it not enough? Was it more than enough? Secondly, banks have stopped paying dividends, and that's specifically on the instruction of the Reserve Bank that requested that banks stops paying dividends and also stop paying executive bonuses to preserve capital. So that's the kind of message, and that means that although banks are extremely cheap, on a 2-3 year view you'll do well. Short term it's impossible to predict. That is inexpensive. The other sectors like property is inexpensive. The question is, there was massive devaluation of properties on the balance sheet. Was that again, is that the real situation or not? But overall our market is relative good value, and I believe that in the South African market there is currently value. But remember, if something is cheap or inexpensive doesn't mean it's tomorrow going to be expensive. It's just that you enter levels at a good level, and I think that's what people need to keep in mind.
Great, I think, and then the second question that clients usually ask is on the political side.
Yes.
And there was so much noise in the last month. And one of the things that happened was that flight to Zim, where in the beginning the government said it's not a problem, we can just go ahead, but then eventually Ace Magashule himself had to apologize, and now we see the defense minister being hauled over the coals. Do you think there is a shift in power in the ANC?
Yes, certainly, no question about it. I think there's a definite shift. I think the shift is towards Cyril Ramaphosa's view of the ANC, and I'll give you a few examples why. The first thing was specifically the flight that you referred to. Cyril would not have taken this kind of action against a senior minister. Minister of Defence is one of the more senior ministers in cabinet. He would not have taken this action had he not been comfortable that there will not be any comeback on it. I would hesitate to say 6 or 12 months ago it might have been handled differently. So remember, she's a senior minister, senior member of the executive committee, and her husband is as well a very senior ANC person and a member of the executive committee. So the question is, the action that he took shows us that he's strongly in power and is drawing the lines. One aspect. The second aspect is, we have had the Hawks acting specifically against projects in the Free State. That comes very close to certain very influential political leaders in the party, and that obviously weakens those members. So if you add the fact that the Hawks activity against specifically members in the Free State, and you link that to the politicians linked to that on the one hand, and secondly you look at the strong activity from the president, I think he's in a much stronger position. I also think the next critical date would be the midterm budget, which is later in October. The question there is, we need to get the economy growing. Our government finances is in a mess, like all other countries. The income is heavily down on what was predicted, what was budgeted for, talking about a shortfall of 300 billion rand. But the key with that is that's almost the same as our annual VAT collections. It's a massive hole in the income side if you look at that. So the question is, how are we going to balance that? And then what are we going to do with the expenses? But what is important is all these numbers become less critical if we get the economy going. Because remember, if we talk about the GDP, it is what is our debt relative to the GDP. If you can get the GDP to grow, and that's our challenge. So there is projects, there's about 51 projects, big projects, and if you just look at the investment that Ford is making north of Pretoria, speak to anybody in that area, they will tell you the excitement. The Mooikloof investment to the east of Pretoria, but there's about 51 of these projects. Some is old, some is rehashed, but that's the kind of infrastructure projects we will need to get the economy going. So that's the next local, the big date will be late in October. My view is that, and we also had the recent allocation of additional power from Eskom, which will include probably about 90 suppliers. So it's a massive amount of capital. We've seen in the past, that's direct investment into South Africa. So there's things happening. It is slow, but there is things happening, and at long last, we're seeing action from the prosecuting authorities.
Yeah, and that is quite positive.
That's positive.
So then if we move on to offshore markets and that impact, of course, again, now we've got the election coming up.
Yes, in America.
So, yeah, in America. So if you have Trump versus Biden, we don't know who's going to win. But what is your view on the differences or how the market would react differently to a Trump or a Biden?
All right. At this point in time, I would hesitate to say that the market is expecting Biden to win. And why I say that is, if you look at the betting odds, where there's some money being allocated, and you look at the recent polls, they favor Biden. But it is still very early in the process. So to say Biden is going to win it is irresponsible. And remember, last time I thought Hillary was going to win, so don't take me on that prediction. The question, however, is I think we need to expect two things. Number one, if it is a close election and Biden were to win, expect a heavy comeback from Trump. He's already said a few times he is questioning the result. So I think if it's a tight margin, we might sit for the rest of November. The election is the 3rd of November. We might sit for the rest of November and into December with legal wrangles and legal battles and a fight here and there. He's not going to accept it lying down. So if Trump wins comfortably, or if he wins, Biden will accept it. If it's a close shave, it's going to be uncomfortable for everybody. If Biden wins comfortably, it will carry through. Now, the big difference between the two from a political point of view is, remember, Trump dropped income tax and business tax for a lot of people, and he also that resulted in the American debt really picking up strongly. So Biden wants to reverse some of those tax cuts and rather bring that deficit down a bit and also spend some money on social expenditure. But I think we need to be careful. America goes through cycles. They've had this democracy for more than 300 years. The question there is close to I think from 1775. It's an incredible amount of years. If you look at from 1775, they've got checks and balances, and a single president in 1 or 2 terms does not change it that much. We used to the impact of massive changes when governments change. We've had 8 years of Obama. Before it, we've 8 years of George Bush. Before that, 8 years of Clinton. It doesn't change that much. It changes, but not that much. So I think it makes great TV, great headlines, but I don't think there'll be a massive sell-off or a massive rally in the markets either way.
Well, that is great to hear. So I think, so we are in an environment where there is so much uncertainty. It's here, it's everywhere, and investors usually want to do something at this point. And really the best thing to do is to sit on your hands and do nothing.
Yeah. Right? Look at your plan and make sure your plan is in place. You don't change your plan because of what you think will happen in the American election. You change your plan because of your circumstances. And I think that comes back to your point.
Correct. And it's really sticking to a strategy. And that strategy for us is asset allocation. So looking at shares, bonds, property, cash, but then also making sure that your offshore exposure versus onshore exposure is correct for your personal circumstances. And if that's correct, then sit tight.
I agree with you. Just on the American election, me and Warwick, who heads up our Chief Investment Officer, wrote a document that we'll send out in the next few days about the American election, just putting some stuff into perspective. So if anybody wants to get the document, just make sure that you contact us. It kind of sketches the environment and how the American election is so different from any other elections, because I think people misunderstand the fact that it's a federation and different states have got different structures, but it's just more around that. But we will send it out in the next few days, and if you want to receive it, just contact your advisor and we'll make sure you'll get it.
Great. Thank you, Theo. That sounds very interesting. And then I think for everybody there, we are at level 1. Just make sure you keep safe and take care.
Thank you very much. Thanks a lot.